Yesterday, the market gave back nearly all of its gains from Monday. So how should you invest to take advantage of this volatility? Joining us right now is Rob Stein. He's the managing partner of Astor Financial. Rob, it feels like we need some Dramamine because the morning has, if it's any prediction of what we can expect today, it's going to be another volatile day. You and I both know the big story this morning dictating the markets has been Lehman Brothers. Do you think enough was said or enough fears were calmed to take this story out of the spotlight today, or the financials continue to be the focus?
Yeah, I think it'll continue to stay in the spotlight and be the focus. Whether you get good news, you get news that's not as bad as you thought, or no news at all, this is the hot button right now that's driving the markets. How are we going to solve the financial credit crisis? Who's it going to impact, and what does that mean for me, the investor? And right now, we're not certain. Over the weekend, you had the Treasury's bailout package. Now people are concerned about Lehman Brothers. But in the big picture, Alexis, the market is really staying within the range that we've created in the first few weeks of January. It feels like it's moving a lot more, but truth be told, it hasn't taken out of January's ranges. Yeah, no, it's an interesting point because, first of all, I should say to people that as we speak right now, Lehman Brothers is up 15%. It was up 30% at one point. But the funny thing I find, Rob, is given what you're telling me, you actually think there are some opportunities and some values, particularly in the XLF, which is a barometer, in essence, an exchange-traded fund that gives you a sense as to, or an investment in multiple financial institutions, many of them broker-dealers. Why do you like it? Sure. What's appealing at this level? Well, first, it's down 50% on the year, and this is an index that has generally been positively sloped throughout the last few years. Secondly, not every financial institution is going to go by the way of Bear Stearns or even going to have a 50% cut in their stock price like Lehman Brothers. We still need the financial institutions to drive this economy. The Federal Reserve and the Treasury are working diligently to try to create a process and a bailout package that will allow the financial institutions to play their role in the economy. And they're going to succeed. So rather than take a bet on Lehman or Freddie or Fannie, the XLF will allow you to invest in the sector as a whole, and it's a sector that as the economy turns around and as these bailout packages become more productive is going to do very, very well. Now, I don't say this is the bottom or you should jump in right now, but right now you should start dipping your toe in the water and buying some of this index and continue to buy it over the next 6 or 9 months, and you'll be very, very happy a year and a half from now. It's interesting because you make a great point, which is that, frankly, so much money right now is in money market accounts or in U.S. Treasuries. It's basically in safe assets because people are afraid, or let's be honest, probably in their mattress pad right now. But you also say, take some of that money now as opposed to waiting later until the floodgates start pouring in, and put some of it in insurance. Why insurance? Well, first, let me talk about why I think you should take your money out of the proverbial mattress, and that is that right now interest rates are yielding less than inflation. You actually lose money over time investing in short-term treasuries. Now, I know it's better to lose 1% than 10%, but at some point, the opportunities of investing in equities will outweigh ratio of staying in cash or in treasuries. And right now, I just think the bond market or U.S. treasuries are in bubble territory. It's just a really poor investment. Then when you look at what to invest in, like we mentioned before, I like the financial sector at this valuation. But within the financial sector, the insurance sector, I think, is going to really enjoy a terrific leadership role as financials as a whole. Premiums are still going to get paid. Insurance industry has done very well over the last few years. I know you have some hurricanes that are hitting right now, but I think it's overestimated the amount of damage that they're going to have. And insurance companies are paid for that risk. So right now they've gotten thrown out with the bathwater of all financials. I believe it's a terrific time to invest specifically in the insurance sector, but in general, financials right now, I think, hold the key. All right. Well, Rob Stein with Astor Financial, thank you very much. I appreciate you joining us. Thank you.